Welcome to the HC Insider Podcast, a podcast dedicated to the commodities sector and the people within it. I'm your host, Paul Chapman. Today we're talking gas stations or petrol stations, roadside retailers, some of the history of that sector, the current trends that are affecting it, and what energy transition means, both the opportunities and the impacts. Our guest is Dan Munford. Dan is the owner and president of Insight Research, a global consultancy focused on convenience stores and roadside retailers. And Dan has a 25-year career in the sector. He also sits on the board of a number of food retailers, digital loyalty businesses, and automated retail businesses. As always, you can support the podcast by giving us a review on the platform you're listening on, or sharing it and liking it on social media like LinkedIn. And I hope you enjoy the episode. Dan, welcome to the show.
It's a pleasure. I enjoy listening to your podcast. It's a surprise and a pleasure to be on one.
Well, too kind. Okay, so we're talking today, though, gas stations, consumers, geopolitics, the whole world of retail fuel, which obviously you spent your career on and currently in. Before we sort of dig into what the current trends are and what the future might hold in an energy transition world and a digitized world, can you just set us up with some background and the history of gas stations? I think we'd all find that quite fascinating.
Well, I guess the first thing to point out is that they've been around quite a long time and we're very used to them. Really, if you look at the liquid fuel supply chain, which is perhaps the sort of complicated way of putting it, it's over 100 years old, isn't it? It's been there since we had horses, and it's spent a lot of those 100 years evolving, but it's always been there through that period, and we're very dependent on it.
Yeah, you're triggering me thinking about Romans having their sort of mansion houses at way stops and whether they sold Kit Kats and Mars bars and so forth. But that aside, so it has been around for a very long time. Can you give us some sense of the evolution? What were the early gas stations like compared to those in the 50s and up to now?
Well, I guess the sort of overview point is that it's changed a lot during that time, although it is still based upon liquid fuels being very much a key part of it. At the beginning, looking back at the beginning of that time period, it was all about liquid fuels with not much else, and very small stations with one pump or maybe two pumps, and that was where things started. Obviously, it changed a lot. If you look more recently, the shop has become more and more important, and that's where a lot of the recent development has been over the last 2 decades.
Yeah, and there's still a lot of diversity, even around the world, and even within countries. There are states here in the US where you have to still have your fuel pumped by someone, which is relatively fascinating. But there is a serious side to this, which is gas stations are somewhat like the trash, the bins. If they're not usable, if they're not full, or in the case of trash taken away, this can cause some. This is a serious political issue, right? This has a society-wide impact on how well they're functioning. They're very immediate to the polity.
Yeah, it's I guess gas stations in geopolitics, you don't really put the two together, do you? But I guess when they're not there and they're not working, perhaps because of a strike or some kind of fuel shortage or something bigger than that, which is potentially where we find ourselves today, in some parts of the world, it's suddenly vital. So they do play an important role, and it is very sensitive. They can be very sensitive politically to what happens to energy markets around the world. And it's quite interesting, obviously, to look upstream at what's going on there and, relating that to experience for the consumer at the pump.
But I remember being in Argentina a decade ago, and the long line waiting at the gas station was sort of quite extraordinary for someone coming from the UK and then the US, where that would be sort of socially, it would be the newspapers would be filled with sort of screaming headlines, right? If that were the case.
Yeah, I think just thinking about we're very we've got used to it. It's very dependable. We're used to being able to pull over and fill up more or less anywhere we like at very short notice. In other words, it's convenient. and we've got very used to it. Obviously, that doesn't always happen if there are shortages, and queues are an exceptional experience in the existing fuel supply chain. I guess, and it's very well managed. It's very successful, we could say, at the moment.
We've already mentioned this one trend, which is the gas station has gone from being purely a liquid fuel retailer into trying to generate other revenue streams via things like having a shop, etc. Before we talk about the shop, can we talk about why is it that points to the incredibly efficient market that it is, that selling liquid fuels alone is no longer viable business, so to speak, in many parts of particularly the developed world?
Yeah, well, I guess just thinking about, the last few decades, if we look at the evolution of the model, the traditional model for these gas stations would be fuel is the driver. When the light comes on, you pull over and you fill up with fuel, and then maybe you pick up two or three discretionary items. It could be tobacco, snacks, drinks, or newspaper, something like that, during your visit. And in that kind of business model, which was, I guess, the typical business model for many of those 100 years, 80% of the gross profit contribution in that business would come from the fuel, and a small percentage, 20% perhaps, would come from the store. And I guess the big shift that's happened, particularly in the last 20 to 30 years, and particularly driven by the more efficient, more entrepreneurial operators and owners of these businesses, is to change that quite fundamentally, and move that business away from a dependency on the fuel profit margin into other more profitable, successful areas. Fuel still plays a part, but it's often become a much less important product than it was. So, I suppose if you look at some of these businesses worldwide, the Circle K's, the EG Groups, the Apple Greens of this world, they've really concentrated on food service. So that's coffee and hot food to go and that kind of thing, as well as general merchandise and grocery. And, they've built a business which is far less dependent on that fuel contributor, and far more diversified into quite high margin areas.
Yeah, this is you're starting to see this sort of the takeover of the FMCG players into this space, or have done over the last 20 years, than the traditional retailers, which were, for the most part, I mean, when we talk about the early part of the industry, it was very much just vertically integrated oil companies. Hence, the most recognizable names on the forecourt are the Exxons, the BPs, the Chevrons, the Peace, etc. Can you just talk about those days and their participation in the industry? Like, why did they vertically integrate, and how vital were gas stations, petrol stations in the UK to their business models?
Well, I think, historically very important, and I think that focus on needing to own the downstream part as well as the upstream part, I guess, has sort of ebbed and flowed over the years. But I'd say it's probably more important again now, because of the profit opportunity from some of those other products that's available in the gas station. And in a way, I think that the major oil businesses are as hooked on that opportunity as everybody else is, and they're going after it in many cases. Retailers like Shell are going after that very successfully, very aggressively. Obviously, at times when the upstream, the price of oil is under pressure, perhaps, as it has been in the past, the downstream part of the business has been, really, really important to their profitability. And I think they've learnt from that lesson, some of the big major oils, and they value the retail opportunity downstream. And I think what you have to remember is that if you look at retail generally, there's a huge background shift going on, to more convenience retail, and moving away from large shops to small shops. Little and often, convenience is very much what the consumer is looking for. So, many of these gas stations, or perhaps we should call them roadside retailers, are exactly in the right location for that consumer. So the oil majors find themselves in a happy position of, their network being very well located for that opportunity. So if they're able to exploit this, and many of them have been successful, are being successful in doing that, then it adds a lot of value to their business.
Yeah, there are periods when there is an enormous margin between, as you point to, the upstream pricing, the wholesale pricing, and the downstream pricing. We've obviously seen well, there are a number, we'll come on to it, there are a number of traders that have gotten into this space. Very notably in the mid 2010s, you saw a number of the big trading houses, the Vitols and the Trafiguras under various brand names, investing heavily in the developing world, in retail businesses in Latin America, in Africa. Can you just talk to that a little bit? I mean, what is that trend indicative? Was that just a period in the market, or have we seen lots of investment in the developing world as well? And if so, why?
Well, I think it's a very important point, actually. I mean, if you look at, I guess, the developing world, or sort of, wealth level, I guess 3 or 4, a different way of putting it, market, there, I guess it's almost a kind of milestone for success, isn't it? And for progress in a country. You have gas stations and you have a good network, and you start to have a retail opportunity in those locations. So I guess it's almost a milestone to becoming a developed economy, isn't it?
Yeah, yeah, and also represents incredible margin opportunities as well, where typically fuels in those developing countries are much higher because it's a less efficient market than, say, in the States or in Western Europe.
Yeah, absolutely. I guess a lot of those markets, again, will be talking about the energy transition. Their relative speed to that energy transition is probably going to be a little bit slower, a little bit later than some other parts of the planet. And so, the liquid fuels opportunity is something which is going to be there longer. So there are also other reasons to get into those developing markets.
Okay, so you've had sort of historically oil producers, vertically integrated, wanting to capture the retail space. There's been great margins there for the fuel itself in a highly efficient market, but if you have the upstream piece, then you can obviously capture that. But increasingly over time, these, as you say, it's gone from being sort of a gas or a petrol station to a roadside retailer, and you've had a different set of organizations come in or set up that are really starting to dominate the space. And this is this, as you mentioned a couple there, Circle K or the Quick Trips over here, Buc-ee's if you live in Texas, which are actually, it is about quality and convenience and stuff. Can you just help us understand? I know it's a little bit outside the world of commodities, but can you help us understand what are the key drivers of success for those setups? Is it cost? Is it convenience? Is it quality? How are the different setups tackling it?
Well, I guess, if you can look at it in a number of different ways in terms of evaluating their business. But I suppose coffee and food is probably one of the most demanding things that you have to transition into in terms of, diversifying your business into high margin areas. In order to do coffee and food well, you need certain operational skills. It's a much harder product group to deliver successfully, same every time, and with very high quality and so on. So I'd say, obviously the brand that sits under, the operational standards, the efficiencies within that business, are very difficult, and that's what separates men from boys, really, in terms of doing this very well or playing at it. And we've seen a lot of success from, you mentioned Buc-ee's, EG Group, perhaps a great example as a global business that's had a lot of success in food service. But it's not an easy thing to do. It's from a retail point of view, these are very complicated businesses now, and it requires a lot of skills, a lot of expertise to do food and coffee and so on in a very convincing way, which the consumer is going to be attracted by. So there's a lot to it, in terms of getting these models right in different markets. But if you do, and if you can then scale that, it's a very big commercial opportunity, and there's a lot of profit in it.
And that commercial opportunity is almost like you see in driving around rural America. I assume the same in Western Europe. Like the gas station becomes essentially the grocery store, the retail outlet for that small town, or small city or whatever it might be, right? I mean, towns of populations of 1,000 or two, it really is just a gas station now. I mean, they've cannibalized the local diner or whatever it might be to some extent.
Yeah, I mean, they've come an awful long way from, I guess, a very small kiosk which sold cigarettes and Coke and perhaps some newspapers. It doesn't look anything like that. It looks like a roadside restaurant with some gas pumps. So in many cases, with a very compelling branded food range and the best quality coffee you can buy. That's a very different looking business, isn't it? It is a very different business, and it's a very successful model for retailers around there. And they, as that food business becomes mature and the brand develops, and in the US, I guess that the really famous people who do this are Wawa and Sheetz and retailers like that. Then they become destinations for consumers, who are not just stopping to pick up fuel, but are there for the food, there for the coffee, and that's really the criteria for success for some of these businesses.
That's not the same. That's very much a developed world. If you go to our office in Sao Paulo, or you travel, Latin America quite frequently for work, you're not going to go eat at a Pemex, right? I mean, they are still very much the traditional fuel service and then mechanics setup. Are you seeing gas stations in the developing world start to go down the line of offering these broader retail offering?
Yeah, I think you are actually. I mean, just take Brazil as an example. I mean, you've got retailers like Ipiranga. I've spent quite a lot of time looking at that market over the years, and it's they're very much looking at developed markets and moving along the same evolutionary scale, if you like, in terms of developing their retail offer. They see that as their future. It's just a question of how sophisticated their offer is at the moment. I mean, it can be very sophisticated in markets like Brazil. The coffee offer, the pastries offer can be extremely strong. So yeah, I'd hesitate to sort of categorize them as on a different level to developed markets, because as you say, in developed markets there's a huge variety of retail experiences anyway, isn't there? It's not all good by any means. It's a mixed bag, so there are operators in who are doing this. And there's another one in Africa, North Africa, called Ola Energy, who are a bit like an EG Group for North Africa, and they're bringing in food service brands like Starbucks and Burger King and so on, and operating those brands in their stations. And the standard of the retail offer would be pretty similar will be the same as you get in any other market. So I think actually obviously it depends. The market does have to have a certain level of wealth in order to afford these products. But once it's reached that, operationally, it can very quickly catch up, and it has to catch up, obviously, if it wants to operate some of those international brands.
So yeah, very interesting. I guess the Ipiranga in downtown Sao Paulo is a little bit different to ones you get on the highways down there and stuff. So there is obviously variation, in where they're citing these offerings. So it's also interesting as well, and I know this is where perhaps our world sort of intersects between what you mainly focus on and what HC Group does. From a trading and marketing and commodities piece, where we've been, obviously most of HC Group is focused, you've seen some pioneers in the fuel retailers, for notably Love, Pilot Flying J, a couple of others, particularly in the US, who have built out midstream marketing or upstream of retail marketing and trading capabilities, certainly because there is an opportunity to capture margin by doing that, but also to manage the volatility in the further upstream, which is very prevalent now in what we've seen in 2022, which in a world where you are sense matter at the retail side, getting the lowest cost fuel, capturing that margin is becoming increasingly important. And that's, of course, why those trading houses have entered the space, and why also, obviously, the producers have the retail offering historically. I guess more recently, we've started to see those names you mentioned that come more from the FMCG side are also seeing that opportunity and looking at building out trading capabilities themselves around the world. And I think that's going to play an increasingly important story, certainly in the energy transition, as these products get more volatile, as the supply chains get more inefficient potentially and disjointed as a result.
Yeah, and I think seems to be a particular thing in the US market, maybe perhaps because of the geography. It certainly seems to be something that is seen as a big business opportunity, has been seen as a big business opportunity for some time in the US, maybe more particular to the US market, I'd say.
Yeah, and it also, I think, as well in the developing market, I think it's probably, yeah, but I do think that's a continuing trend, and we've seen significant investments, over the last decade, spearheaded by, I think, the likes of Love, the business Musket, but also Pilot have made some really big, Pilot Flying J have made some big efforts here. But I think that's certainly, at least we're seeing that becoming a more global trend in a world where the wholesale side is so volatile. To manage the supply chain, you do face quite a very efficient downstream space where there's no, if you cost more than a couple of cents more than your next nearest competitor, you're not going to sell fuel, right? So I think it's become both crucial to manage the risks in their supply chain. It's no longer that sort of low cost, low volatility world that we were in for the last decade, but also commensurately, the obverse of that, the corollary, is that there's a lot of opportunity there to capture more margin if you can access more efficient barrels upstream.
Yeah, I think that's historically always been a way of leveraging more profit from the fuel side of your business, and obviously giving your business control as well, which it can be extremely important. So yeah, I agree with that.
The HC Insider podcast is brought to you by HC Group, a retained search, intelligence and advisory firm focused solely on the global energy and commodity sector. With 6 locations across Asia, Europe and the Americas, and over 50 consultants. To find out more, go to our website, hcgroup.global. There, you can also sign up for our HC Insider content for more interviews and white papers on relevant trends and talent impacts in the commodities world.
So this all sounds like quite a great setup, right? You've had gas stations who have been pivotal to transportation, to our way of life for 100 years, and almost a status symbol of being a developed economy, of how efficient that network of distribution is, as you've alluded to. And now becoming almost the corner store, the grocery store for many communities around the world, and even, dare I say it, becoming a destination of choice in some exceptional examples around the world. The one big element that this world faces is obviously energy transition, and in particular a move to electric vehicles, where of course part of the joyous benefit is that you get to just charge it overnight, as opposed to having to go to a gas station, at least if you're in your normal sort of commute around a city or whatever it might be. I mean, I imagine this topic is front and center of the work that you do and the boardrooms of all of these fuel retailers that we've been discussing.
Yeah, 100%. Of course it is. It's seen as a challenge, yes, but it's also seen as an opportunity. I guess that's the business mindset, but it is an opportunity for a number of reasons. Perhaps just stepping back a bit before going into where the challenges are, what the opportunity is. Big picture is there's a multi-fuel future is rolling out as we speak, and the energy transition is accepted in our industry and it's being planned for. That's definitely happening. It's very much something that the CEOs and the boards understand quite well now, I'd say, after spending quite a few years studying markets like Norway, which are almost like the global test lab for this, and other markets where that energy transition is happening first. Having said that, of course, the internal combustion engine and core petro technology is going to be with us for a while, and it's patchy. So in some parts of the world, Norway, some parts of Europe, like Denmark and Sweden, the Netherlands, it's happening relatively quickly. Obviously, China as well. California, the west side of Canada. These markets are transitioning quite quickly. Other parts of the world, not so quick, and it's going to take longer. So it's patchy. So I think the way those businesses are looking at this is very much to see a patchy future, or if you like, I think it's been described as a sort of mosaic of different energy products that need to be made available at a different
Yeah.
pace in different markets. That's how it's been seen.
Yeah, and you get it wrong, of course, and this is the challenge because it is a transition, and the timelines is the big unknown, right? To some extent, we probably will all. There is a future where we will all have mobility via electrons rather than hydrocarbons, but that we don't know whether that's 20, 30 or 100 years away. But in the interim, obviously we alluded to at the start, you start having long lines on forecourts and governments change pretty quickly. It's just, like with that trash not being picked up.
Yeah, absolutely, and it's highly sensitive. I mean, I'd say the industry has got its head around it. And just going back to some of the things we were talking about before around food service and retail diversification on these sites. If 80% of your gross profit is coming from something other than fuel, well, and you're more and more a destination for those products, you haven't got so much to worry about, have you? So in certain parts of the world where, and Ireland is a great example of this, we have businesses like Apple Green and Circle K and Maxwell who really understand food and can do an incredibly good job on that. They are less dependent on fuel now. So these kind of businesses are very well positioned for that energy transition when it comes to their market. In some cases, it hasn't really come yet at scale, unlike perhaps Norway, but they're very well positioned for that because they've moved their dependency over from the old model, which is where 80% of the gross profit was coming from fuel, to it being much less important than that. So there's a lot of businesses that are quite well adapted and ready for that change. And I guess that's the most important thing they can do to prepare. So I think there's a real acceleration of diversification into those other retail opportunities, and food service is the big one, in order to prepare for the energy transition as it comes across the world. It might be 1 decade in some markets, it might be 2 decades or more in others.
Mm.
The timing is of that is difficult to predict.
Yeah. So let's get into some details there, because I think there's also going to be a difference in where gas stations might be, or let's say roadside retailers that have fuel, whether that's electrons or hydrocarbons, might end up being predominant compared to today. But you talked about Norway there as kind of a test lab. Can you just, I know you spend a lot of time there with clients. What is the Norwegian experience to date, and what can that tell us about sort of how directionally where this is headed?
Well, it's a good place to go and see the future, because obviously Norway is a long way ahead of us down the EV curve, and so it's very interesting to see what that means. If you look at, there's an EV association in Norway that published some very good figures, and if you look at their latest figures, 79% of passenger car sales were pure EV, at 9% were plug-in hybrids. So you add those two numbers together, and almost 90% of passenger vehicles that are being sold in Norway come with a plug. So that's a huge difference to many other markets. And that's been over a number of years. It's been obviously building up over a number of years. It's taken perhaps longer in Norway than it will take in some other markets, because there are much better EV models available now, to much more attractive to the consumer to buy. That wasn't the case in Norway a few years ago. It's changed. But if you look at what that means in Norway, well, on average, around 70% of the total car park in Norway, that's the vehicles, that are on the road, are pure EV now, so that's quite a big number. If you look at the big cities like Oslo and Bergen, it's closer to 30% of the vehicles on the road are pure EVs. So that starts changing things. That's why I call it, many people call it an EV test lab, because when you start to get that kind of volume, you start to get effects, and you also start to get business opportunities from charging on the go, because it's probably a bigger opportunity than sometimes is considered. And obviously, if you know how to go about it, it's definitely worthwhile.
What do you mean by that? I mean, can you sort of, this is the deployment of fast chargers that people are going to have to potentially stop more often, or for longer periods of time, and therefore need to spend more time in the retail store. Can you just help us understand what that opportunity might look like?
Well, I guess the typical presentation, looking at the difficulties of this from a business prospect point of view for our sector, says, well, 80% of the charging is going to happen at home, or in the office, and so we've got a much smaller slice of the cake to go after here than we did have as an industry. So that's bad news, right? And there's more competitors, for fast charging on the go as well, because anyone can put up a fast charger.
This is where the hairdresser has a fast charger in their parking lot, basically.
Yeah, exactly. Obviously, there's some big changes. Having said that, there's certainly, I think in Norway, what we do see is that there is certainly a business model for fast charging on the go that's working, and it requires you to rethink your network for that opportunity. It requires you to think about your investment in those chargers, how many of those chargers you build, and obviously it's an expensive thing. So some of these are quite big decisions, but there is good return on investment being proven in the Norway market. So there is certainly a way of making money out of this just from the charging opportunity on the go. And I think the other thing to point out is, although the sort of traditional view of this as an opportunity said, well, it's a very small piece of the cake. A lot of charging will happen at home or in the office. That's in Norway. I think a lot of those numbers have come from markets like Norway, where it's quite easy for most people to charge at home. They have the opportunity to do that. In other markets, you take the UK as an example, it's much more difficult to charge at home. There may be bigger opportunities in markets like that, where consumers still want to buy EVs because they're fantastic. They're the next big thing, even though they know they're not going to be able to charge at home. So if you look at many UK cities, that's certainly going to be a bit of a problem. So there is likely to be more of an on-the-go charging opportunity than people realize, and that's one side of the business equation to consider, and one learning you can take from Norway.
Does this mean, though, that those organizations that don't have a solid retail offering are going to face real challenges at some point? Again, that's the unknown X, isn't it? In 10 years or whenever it might be, because, they're now actually competing with the supermarkets. So suddenly the competition for many of these fuel retailers no longer is other fuel retailers, it's other retailers. Because everyone can stick, as you say, an EV charger in a parking lot. In fact, just in my neighborhood, the supermarkets are filled now with them, surprisingly, given where we are. So that's going to rule out those organizations, or going to be really challenging to fuel retailers who just really focused on the fuel and maybe car servicing around that, compared to those that have built out these significant retail offerings.
Well, I think fuel retailers who are still very much focused on their fuel business and haven't really diversified over the last few decades were going out of business anyway, and we're under a lot of pressure, enormous pressure anyway. And in many cases, the small operators who never made the investments in their retail space, or maybe just didn't have the room for it on their sites, a lot of those sites have closed. So if you look over recent decades, the number of gas stations in markets like the UK, for instance, and the US has shrunk quite considerably. So that's happening anyway, and will continue to happen. I think this is an accelerant to that, and a big incentive to diversify those sites. And obviously, I'd say the other factor to really consider looking forward to what kind of site is going to be successful is those sites need to be bigger. They needed to be bigger anyway, so you could get a good retail offer in them. Even a drive-through, that kind of thing, is working very well. So those sites needed to be bigger anyway, regardless of the energy transition, just to get multiple food service offers on, for instance, and a grocery option, merchandising and other merchandise and so on. Obviously, when you add to that the charging on the go opportunity, those sites really need to be quite a lot bigger, because you don't just want two chargers, you want multiple fast chargers as well. And those chargers are going to be in use not for 2 or 3 minutes, which is what we're historically used to, but 20 to 40 minutes of charge. So those consumers are going to be at those sites for a lot longer. And again, everything's moving towards larger scale. So if you have sites that have got that kind of scale, or you're acquiring them, you're moving your business, you're reorientating your business to the future, aren't you?
Yeah. So we had Arkady Sozanov, CEO of FreeWire Technologies, who have just done a number of joint alliances with P66 and Chevron and a few others to deploy fast chargers onto the forecourt. And I encourage listeners to go back and have a listen to that episode we did with them a year ago or so now. And what also is forgotten is the power intensity that it takes, the amount of power. I think you mentioned that, 2 fast chargers in the forecourt of a Walmart that don't have a battery set up like his do can use more power than the entire Walmart, right? So firstly, these things, infrastructure wise are quite challenging as well. It's no easy thing to put a bunch of fast chargers on your forecourt unless they have integrated batteries and so on. But it strikes me, and this might be a bit of a stupid question, so excuse me, but obviously the reason why a Chevron and a Shell are selling, have retail fuel stations is because it's their stuff that they're selling. Are you seeing renewable power companies, utilities even thinking about building their own fuel fuel retail businesses in the future? Because now actually the product is power rather than gasoline.
Well, I mean, take Norway as an example. You definitely see the utility companies moving into the on-the-go charging space as a major competitor. So absolutely, it's already happening. They're not really looking at the additional retail opportunities around those EV charging opportunities. They're just looking at the EV charging opportunities. And obviously any location with a car park is suitable for developing that. And that's very much what's happening. So absolutely. And the utility companies, I think, are looking at that's a good way to enter a market. So they're looking at entering markets with that kind of offer. So they're very much here to stay in the on-the-go charging space, I'd say.
Yeah, because it is fascinating. It is an opportunity when you think about, you spend whatever it is, depending on your car, 4 minutes filling up with gas, and in some stations around me, you want to get away as quickly as possible. But actually charging your car is a different timescale. We're talking about 10 minutes to get a fast charge for 200 miles or whatever it might be in some cases, but certainly longer in others. And that's a huge captive footfall that for a much longer period that you can get hold of if you are, and again, frankly, any type of retailer that has the right location. And one of the things all these gas stations do have often is very good real estate.
Yeah, absolutely. I guess when you have early adopters with EVs, I guess they're not typical of the population, perhaps in the time pressure they're under. Perhaps, I mean, perhaps that's a bit of a generalization, but I think there's a bit of truth in it. They can afford perhaps to not plan their day out carefully and to waste that 20 minutes and not really think how they're spending that 20 minutes doing other things as well as charging. But I think what we've discovered in markets that are more mature as far as EV penetration goes is that as this becomes a normal thing to do, and normal people, if you can sort of pardon that description, have EVs and have very busy lives, the way they start thinking about it is a bit different. They're thinking, where shall I, what else can I do with my 20 minutes? As well as charge, because I don't just want to sit there and wait while my car charges, and I may indeed have to queue a bit to get onto the charge, so that opens up another sort of question as far as the efficiency of their day goes. But once this gets into normal, mature market status, then how you choose where you spend your 20 minutes becomes the key thing. That becomes that experience or that efficiency, becomes, I think, the key differentiator in choosing your destination, your charging on the go destination. So it has to fit into your life, I think, is the point.
I guess final question is, this is going to be quite a tricky transition, right? Because it's not as gas stations, hydrocarbon fuel retailers become less competitive as there are fewer acquirers of fuel. And again, this is let's just to say we're in 20, we're all still around, and we haven't been taken down by solar flares in 2042. As markets degrade, they become less efficient, and prices go up, and volatility comes back. I mean, it's going to be quite a difficult transition to navigate when half the cars are EVs and half the cars are gas. That's going to be a really rocky, choppy market for gas retailers to navigate, right? And I guess that's why they are, as we said earlier, building these trading capabilities further upstream, because they recognize how volatile that space could become.
Yeah, I guess there's predictions and there's reality, isn't there? In terms of how energy transition is going to actually map out. I think one of the interesting things that perhaps has come up more recently is the role of hybrid vehicles in all this, and the role perhaps of hydrogen in heavier vehicles, and the part that would play. So in a way, all the cards aren't quite on the table yet, in terms of how this is going to shape up. Interestingly, in Norway, hybrids, things really took off in Norway from 2017 onwards with pure EVs, in terms of their sales going from, I don't know, about 20% up to 80% of all passenger vehicles. Interestingly, in the same period, Norwegian drivers lost interest in hybrid passenger vehicles. And so from that, do you extrapolate that the same experience is going to be for hybrids is going to be the same in every other market, or is Norway different? I think if you listen to some of the latest sort of thinking on this, perhaps hybrids will play a more important part. Certainly some of the big car manufacturers have this view. I think Toyota, for instance, is one of the big OEMs that certainly has the view that hybrids will play a very important part in this. Perhaps there are elements like that which will make the transition easier and, if you like, less more stable as it happens.
Yeah, it's really tricky, isn't it? I mean, it strikes me as we talk about this, if you're on the board of one of these fuel retailers, you've got a lot of different things to navigate, and you've got a lot of big bets to start making. As you say, yeah, who knows about hybrids? I mean, you talk to EV drivers and they love them, and not because they're electric vehicles, but because of the convenience and other attributes that they have. And you've got lots of different auto manufacturers making different bets, whether it's on BMW coming back out and backing hydrogen, or others going straight to EV. It really is a challenging space. As you say, sort of the lifeline that these companies have built, or at least those that are doing well have built, is actually, yeah, they've shifted. Fuel is how people turn up, or used to historically turn up, and now it's all about the retail opportunity. The other trend that we haven't touched upon, I just want to finish on, is obviously digitization. That obviously, I know one of the things you work on is consumer loyalty rewards and so forth. That's always been a big part of the fuel retail industry. How is that evolving, changing, if anything, in the sector?
Well, I guess as in all retail, it's very important, and it's being developed at pace. I mean, I guess you could look at a number of recent developments to illustrate that. I think one of the most interesting one is really how subscription services are developing. So if you look at the European and North American markets, for instance, Circle K have started rolling out subscription for car wash. So you drive up and there's a lot of automation, not much friction associated with getting that regular car wash. And you're, from the retailer point of view, those customers are a recurring revenue. And it's not just car washes, that you get that digital handshake happening. I think Sheets offer a fries subscription. So, you get fries for a year on subscription. And, obviously there are conditions around how many fries you can eat, but not many. It's a small example, but I think that, the digital relationship between consumers and these operators is again a very big opportunity, and it's developing in a number of interesting ways. I think subscription is a great example of that.
Yeah, well, it's certainly fascinating, and as I said, and it's a big part of our world as well, as these organizations are building out these trading and marketing capabilities to capture margin and to get ahead of the volatility that's already there.
Yeah, and I'd say, one thing I'd say, Paul, is that those businesses that are really going after food service in particular are the ones to watch, and they're the ones that are least worried about the energy transition, because fuels is an important component, but it's a replaceable component in their businesses when that happens in that market, because they've built up competencies and brands and expertise in food, which is obviously a very good thing to be offering, whether it's in a recession or otherwise, in terms of being something that consumers will want 3 times a day. It's a very reliable business model, and a successful business model for them. So they've got much less to worry about than those who are very focused on the fuels business, as you were saying.
Yeah, yeah. Well, and if my neighborhood's anything to go by, a lot of what were gas stations now no longer have working pumps and just sell, okay, in this case it's beer and other probably less, not exactly fresh food, but that's where that transition's already happened. Dan, for listeners, where can we find Insight Research and the work that you do? And I know you attend a lot of conferences and give a lot of presentations.
Yeah, well, you can find us at insightresearch.co.uk. We're always at the NAC show, which is the big trade association for our industry. It was in Las Vegas a few weeks ago. You always find that in October, somewhere in North America, either in Las Vegas, Atlanta, or Chicago, every year. And obviously on LinkedIn. I spend a lot of time on LinkedIn, perhaps too much.
Well, Dan, I've found it really an interesting journey to understanding more about this from the retail side, and let's hope we can have you back on in the future and see where it is. I think there's some really, it is it is a microcosm of the energy transition, but one that touches every single person, or us in our daily lives.
Absolutely. Well, great pleasure. Thanks for having me on.
Thank you for listening. If you enjoyed this episode and want to support the show, please give us a positive review on Apple Podcasts or Spotify.
To find out more about HC Insider and HC Group, a search and advisory firm dedicated to the commodity markets, visit our website at www.hcgroup.global. There you can find out more about our services and our offices around the world. There you can also find more content, from interviews to insight pieces to more podcasts focused on the commodity value chains. Thanks again for listening.